Let us see the next question. Messrs. Parker and Company is contemplating to borrow an amount of rupees 60 crore for a period of 3 months in coming 6 months from now. So we are going to borrow for a time period of 3 months only. When? After 6 months. The current rate of interest is 9% per annum. But it may go up in 6 months time. So we have a fear for that. The company wants to hedge itself against the likely increase in the interest rate. The company's banker have quoted FRA forward rate agreement at 9.3%. What will be the effect of FRA and actual rate of interest cost to the company if the actual rate of interest after 6 months happens to be 9.6% and 8.8% per annum? Try to calculate answer on your own. Let us have understanding, let's say, how to make the calculation of answer. Information is given, let's say there is a company called Parker and Company. They want to borrow an amount of 60 crore for a period of 3 months, 6 months from now. So it is 6 into 9 FRA. Current rate of interest is XYZ. This information is of no use to me. This information is provided just to misguide me. It may go up. Fine. That is what's the reason because of which you are entering into the FRA. Even though if it is given that it is expecting it to fall down, we have to enter into the FRA and we have to give the answer as what we do usually. Because there are fair chances that the institute may provide that it is expecting that the rate of interest is likely to fall, yet it is considering to enter into FRA. Means in short, FRA will be entered upon. The company wants to hedge itself against the likely increase. Fine. 9.3%, this is relevant for us. This is important for us. 9.3%. And what will happen in these two situations? 9.6 and 8.8. Let us see that how to do answer. I request all of you to write down answer along with me. Heading is actual rate of interest 9.6%. Step number 1, calculation of interest cost using rate of interest of forward rate agreement. In that PRN upon 100. This is the way we will compute the interest cost. What is the amount of the loan? 60 crore. What is the rate of interest? It is 9.3%. What is the time period? 3 months. So the answer will be ₹1,39,50,000. Step number 2, calculation of actual interest cost at the rate of 9.6%. Again simple PRN upon 100. What is principal amount? 60 crore. What is the rate of interest? It is 9.6%. Into here 3 divided by 12. So 60 crore into 9.6% into 3 divided by 12. That comes to 1,44 lakhs. Okay, this is what's the actual interest cost. Step number 3, we understand that the actual interest cost has increased, so the Parker and company will receive the compensation. Amount received by Parker and company. What is the amount that it will receive? We understand 144 lakhs minus 139.5 lakhs divided by we understand that 9.6% is the per annum rate of interest into 3 divided by 12 is 2.4 percentage. So 1.024. So over here it is 0.096 into 3 divided by 12. So 144 lakhs minus 139.5 lakhs, that comes to 4,50,000 divided by 1.024, that comes to 4,39,453. 4,39,453. I'm ignoring the fraction. So this is the way we understand, so the amount that will be received by the Parker and company. The question ends over here, yet only for the purpose of understanding, I show further calculation to you like this. Let us say that this is 1st of January. After 6 months, so it is 1st of July. You require an amount of 60 crore. However, you are going to receive the partial amount 4,39,453. This is the amount that you receive. So only the remaining amount is what you are going to borrow. However, the rate of interest is going to be 9.6%. So it comes to 59 crore 95 lakhs 60,547 plus 2.4%. Simple I am doing. And that comes to 61 crore 61.395 crore. And you can see that the amount of the interest is 1.395 crore. That is the interest that you should have. This is the way we are required to understand. So step number 1, interest cost. Step number 2 is actual interest. And step number 3 is amount received. I request all of you to write down answer along with me for 8.8%. Step number 1, interest cost as per forward rate agreement rate of interest. It comes to 1 crore 39 lakhs 50,000. This is the way we will have the answer. Step number 2, in that interest as per actual rate of interest, that is 8.8%. 60 crore into 8.8% into 3 divided by 12. That comes to simple 1.32 crore. Now again the difference this time, Parker and company is required to pay. So step number 3, amount payable by Parker and Company. So that will be calculated like this: 1 crore 39 lakh 50,000 minus 1 crore 32 lakhs divided by 1.022. Okay, we understand that the rate of interest per annum is 8.8 percentage. So for 3 months it is 2.2 percentage. This is what we understand. So 1 crore 39 lakh 50,000 minus 1 crore 32 lakhs. 7 lakh 50,000 divided by 1.022. So it comes to 7,33,855. This is what we understand. So again we understand that say at this point of time you have to understand that say on 1st of July 60 crore plus 7,33,855. This is the gross amount that you borrow. You pay certain amount for the purpose of the forward rate agreement which was entered upon, and remaining amount will be used by you in the business. So 60 crore 7 lakhs 33,855 plus 2.20 percentage. That comes to exactly 61.395 crore. This is what we understand conceptually. This is the 8.8, step number 1, then 2. This is the second step. Then this is the third step. And at this point of time, the question is over. This further working is only for the purpose of understanding. Of course, that does not form part of the answer. This is what we understand.